In this, the second part of our look at US earnings, we are on tech stocks today. This is the area of the market that in some cases has outperformed. But can these companies continue to deliver results to match? We've seen lockdown stocks like Peloton and Zoom gain considerable weight during the early part of lockdown, only to lose half their stellar gains as people return to work. Well, joining us now is Paul Sedgwick, co-founder and CIO at Frank Investments, for this second part of this look at third quarter earnings. And Paul, I want to start off with this question about tech generally. What's going to be the message from the sector, do you think, as we look at these third quarter numbers?
Well, I think there's a couple of things earnings growth is going to be reasonably strong from this quarter. I think that obviously they faced some in some areas. Some of the tech companies, we've read a lot about the ability to get semiconductors and some of the inputs that they need, some of the supply constraints that they've had. I know trying to get an iPhone apparently at the moment is not that easy. So I think that that's one of the areas that we could see shipments and this sort of thing have become. So that'll be interesting to see how they've impacted it. But overall, growth in the technology sector should continue. There's a great deal out there to continue to support the tech sector, and so they should see continued growth in that sector.
For those people that take your early morning call at Frank Investments, you have spoken in the past about how the tech sector is vulnerable to rising interest rates.
Yeah.
How important is that going to be? Looking into 2022, we now have a fairly good opinion of what the Fed's going to do. Here in the UK, we're looking at 2022 interest rate rises. I know the ECB is a little bit behind time, but what sort of impact is that going to have? Do you think that we should have one eye on the future for these tech stocks rather than just the third quarter?
Yeah, I think so. I think you've got to look at the growth in technology in the world is going to continue. And there are going to be winners and losers within that. And we can see, I mean, one of the conversations we've had in the past is about the growth possibly in technology within healthcare, and cybersecurity and these sort of things. So I think technology is there to continue to make an important play an important part in the growth of the global economy. I mean, efficiencies of scale can be gained through technology. We've seen the way that people can now communicate through technology. So there's a lot of growth that's going to continue within the tech sector. But they may, in the short term, face some headwinds. Higher interest rates will impact their valuation. As we know, tech sectors, because of the strong growth, command higher valuations. Higher interest rates has an impact on that valuation calculation. So there could be some impact from there. You're probably likely to see tighter regulation. You've seen what's happening with Facebook in the last week or two. So you've seen what's happened in China So it's possible that you will see greater regulation. You've seen the tax changes that have come in the recent past. You've seen Biden's tax strategy, where he's got countries to time to minimum corporation tax level. So you've seen that's also, they are going to face short-term headwinds. They're probably going to have to, some of the tax advantages they've had are probably going to go. Valuations will be affected by higher interest rates, and they've had some supply constraints, and obviously taxation is probably, and regulation is going to increase. So they are going to face headwinds in the short term.
It's interesting. I was talking to someone, a chief executive of an oil company, just last week. He was sitting where you were talking, and he was saying new technology is helping me drop costs. And that obviously is a really big thing. So tech is, as you say, getting absolutely everywhere. One of the other things I find interesting as well is the skill set here. Obviously, technology makes advances well into the future, and we don't know yet what the next new turn is going to be. So companies, it's very difficult to hire for the future, I guess, to future-proof companies. But I'm also hearing that even to hire people that understand current technology, it's becoming very, very expensive. And these tech companies are having really high costs on staffing. And this is going to be a big problem, isn't it? Is finding the right staff to be in the right place at the right time at the right price.
Yeah, I think that's at the moment. That's a lot of companies are suffering from the higher employment costs. But I think you're right. I mean, it's a skillful area. You have to be very knowledgeable to work in this area. And I think that finding the right people is going to be tough. But also the people's education, colleges, universities. I'm sure you're getting more and more people coming into that sector. I mean, years ago, when you left university, many people who wanted a career looked for the city, for the areas where you could get well remunerated and well paid, and where you got. And now a lot of the cities losing people to the tech sector, because obviously you can get. That's an area where if you're skillful and you're very well skilled in this area, you can get very well remunerated.
Interesting as well. Talking at the top, as I was talking about Peloton and Zoom, I pulled those two out because they have seen some hefty declines. They were up 800 or 900% during the lockdown last year. And of course, those who were lucky enough to have space got a little Peloton, bike in the front room. They could use their off time at home, working from home, to exercise at the same time. But now all that seems to have gone out the window. This is the problem about tech investing, isn't it? It's difficult to keep on top of the fad to some point, and understanding what people are going to be doing in the next stage of their lives. I mean, is Zoom over? Do we avoid any stocks that have a communication point to discuss? I mean, what do we do now? Online companies that have been delivering right the way throughout the lockdown crisis, old hat.
Look, you see this in all sectors. You get fads, you get bubbles, you get valuations stretched. In the last year, you've had a lot of liquidity, probably chasing a relatively small number of companies, and Peloton have probably benefited from that. It happens, and what investors got to do is decide where they feel the valuation is right, and see and maybe at times have to look through some short-term hiccups along the way, but believe that over time, people will buy more and more Pelotons, and that more and more people will want to maybe train from home, and as opposed to. But then that brings in the question: what's going to happen to gyms in the future? So it's difficult. I think you always see fads develop and times when various industries do extremely well, and valuations get a little bit stretched because people get a bit greedy, over extrapolate the growth and earnings a little bit that may take place, and then that just measures itself out over time.
Let's talk about sectors then to watch within this tech earnings season. Everybody's got a telephone. Do they need another one? Everybody's got a favourite online delivery company, and we've already said we're going back into the shops a bit more. Where is the keen money going within the technology sector?
Well, I think if you think, you're absolutely right. I mean, obviously, the things that have done very well in the past year have been the technology companies that are more related to less movement, if you like. As we said earlier, 6 months ago, we'd have done this from my home and probably your home. Now we're sitting opposite each other, and we're not using Zoom to do it. So, but I do also think that using Zoom has become much more indigenous to people's lives now. We tend to react in somebody's up in Manchester and down now, whereas a year ago they'd say, look, I'm coming down to London a week on Thursday and I'll see you there. Now they say, let's pick up the Zoom and talk to me. So it's a different world. But I think that the areas you've got to think about, I think IT and technology and healthcare are going to become more important. I think cybersecurity is becoming much more important to the world. Obviously, we've seen how you mentioned earlier how technology can help certain industries, the oil industry, probably the industrials manage to keep costs down. So it'll be interesting to see companies who are related to that. If you look at something like Apple, it seems to me that no matter how many times they upgrade, people still want the latest Apple iPhone. And the problem for them is how many they've managed to deliver against their demand. And obviously that keeps up pent-up demand for longer, but in the short term, you may see a short-term hit to results because they haven't been able to sell as many as they wanted to, because they haven't been able to make as many as they wanted to, because they haven't got the parts that they wanted to get.
Yeah, that is an interesting point, actually. It brings in some other area we haven't really touched on, and that's the relationship between various parts of the world. A lot of Apples, and indeed we also know electric vehicles, of course, are made in China. And it's a relationship, the political relationships that keep those pipes flowing. And that's seen a bit of a breakdown, hasn't it?
Yeah,
I mean, this is, you talk about the problems in supply chains, and it is because of these cross-border issues that are beginning to emerge. I mean, Brexit and the Eurozone, crikey, that's the biggest thing we've got to talk about here, and that is causing problems, isn't it?
Yeah, and you see, this is, you're absolutely right. Now, you see, if you look back over the last 20 years, we've lived through maybe even nearly 30 years now, how time flies. You've seen inflation running around 2%, where central banks' targets have been. And this is because a lot of economies, the developed economies like America, ourselves, Europe, have effectively exported their inflation to places like China. They've manufactured things in China, Eastern Europe, India at lower cost. Therefore, they've been able to pass those costs on to and maintain prices. So and also to be perfectly honest, we've also imported labour that has been cheaper. So we've effectively exported our inflation away. This could be changing if you see that the relationship between China and America becomes you get higher tariffs. If companies start to bring back manufacturing back into their domestic economy, obviously this has a real impact. This could be another inflationary pressure because prices will rise. This border tensions between borders will rise, tariffs will rise, and this will be another pressure, another thing for central banks to deal with.
And as a chief investment officer, does that worry you in terms of the outlook for investments on the markets?
It worries you for the outlook for, it worries me for the outlook for, because global economy's grown as trade has exploded around the world. If that's reversing, yes, it does have to worry about. It will have an impact on economic growth and could have an impact on prices, which could have an impact on inflation, on interest rates and inflation and all that sort of thing. Yeah, so it is a concern.
I feel another interview coming on another subject. Okay. No, Paul, thanks indeed for joining us. It's been a pleasure from Frank Investments.
Thank you, Joe. It's been a pleasure to be on with you.
Paul Sedgwick, he's the co-founder and chief investment officer at Frank Investments. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.